Hi there. Polkadot. This price has barely moved this week, and it seems like it's building a near-term bottom. At least it looks that way on the charts. So it's time to look at it through the Wyckoff lens and see whether there are any kind of whales move. If you're new to my session, I'll cover the Wyckoff stage, potential price trend change, as well as key price levels. These are education content, not financial advice. It's very interesting to look at what happened over the past 2 weeks for Polkadot. It's basically two white crosses. Last week, the sidebar of the horizontal bar of the cross is a little bit thicker than this week, but there's still about 30 hours for this week's candle to develop. So it's not set in stone yet. However, if we look at the volume, it has gone back to about average, over the past, compared to the past 2 to 3 months. Okay, not really getting to the point of what happened 2 weeks ago, but we can understand because if we look at this long wick from the bottom back in the beginning of this month, it basically means that when the bears try to push the price to retest the red key level of 97 cents, where the October 10th tariff announcement day last year tested, the bulls stepped in fiercely. That's why we see this kind of commitment from the volume, about 40-50% higher than the previous month, basically. All right. So that's very important. And that's why the price is still sustaining around that level, where the bulls successfully supported that low. From a Wyckoff perspective, it's still within the mid-late stage of accumulation, meaning the testing period is still going on. Testing the paper hands and diamond hands, who actually are the real diamond hands. And it's unavoidably testing the patience of everybody. Okay, so we need to see the confirmation next, meaning the sign of strength with sustained price increase back to challenge the orange key level of 5.15. Yes, it's still quite far of a distance from this point. However, that's what we need, okay? In addition to price climb, to that challenging that level, we need to see volume that's higher than average. Actually, if you look at what happened over here, since June last year, that was a very low point. From March to June, you see the low points were actually all across. Of course, October, we see a decline from August as well, but they're still slightly higher than the June low. So what we are seeing here is that if you look at the average volume, it's actually slightly increasing, not by a lot, but slightly still. Okay. Of course, there are outliers around here, but those are pretty much like one-off events over there. So if this continues, meaning people are potentially getting back into this game, but it would still be early. A good sign, but an early sign. Now, the big picture explained, let's get to the micro. I explained before that the price is still within the downward channel, started since September last year. It has been testing the channel ceiling, and it has now come to test it again. Last time I said, by the 23rd, there's an opportunity for the bulls to go outside of this channel ceiling and confirm that the downtrend is over. We're getting very close to that opportunity, but looking at what's going on right now, you see, yesterday, there was quite significantly higher volume compared to the past week. But the candle's price wasn't moving that much, meaning there was quite a bit of a change of hands within that narrow range between 130 to 135. 130 cents and 135 cents. Today, we see a wake from the top, an aluminum market, meaning when the price tries to get close to the 1.45 orange key level, is getting suppressed. There's still selling pressure, even though the price is slightly climbing by 1.5%. If we draw a line over here, we see an ascending, meaning higher low, and as well as higher high. So whether that can sustain, and come to break this in 2 days' time, we'll get to see. If it misses, however, if this higher low trend line is strong enough, by the end of the month, we get another opportunity. All right. Otherwise, if it gets heavily rejected when it reaches the orange line or the ceiling of the downtrend and comes back down, then the 0.97 red key level will be the key support level. And that means we probably have to wait till the middle of March to get another chance for the downtrend breakout to happen. If you're interested to access these sessions 2 days earlier, join the channel membership now. Here's another analysis for you. Thank you.